federal government says it plans to borrow from the pension fund and other locally available resources for infrastructure development in Nigeria. Coordinating Minister for the Economy and Minister of Finance, Wale Edun, spoke at the end of the Federal Executive Council meeting, chaired by President Bola Tinubu on May 14. Edun said the government is focused on tapping into domestic financial resources, particularly pension and life insurance funds, to leverage local funds for national growth. He added that it was a significant step towards driving economic progress and addressing critical infrastructure needs. Also, Nigeria's headline inflation rate has continued to rise to 33.69% in April 2024, its highest since March 1996, up from 33.2% in the prior month. According to Nigeria's Bureau of Statistics, food inflation, which accounts for the bulk of the country's inflation basket, rose to 40.5% in April, compared to March's reading of 40%. Central Bank of Nigeria Governor Olayemi Cardoso, after hiking rates twice this year, indicated that interest rates will stay high for as long as necessary to bring down inflation. The Central Bank of Nigeria is scheduled to hold another rate-setting meeting this week. I'm now being joined for an overview of all these economic stories by Dr. Ayo Teriba, who is Chief Economic Officer of Economic Associates. Good to have you on This Day Live, Dr. Ayo Teriba. Thank you for joining us.
Thank you very much, Dr.
Yes, well, I don't know when you are going to come back to your seat here, as a regular commentator. But let's deal with the subject at hand. Now, former Vice President Atiku Abubakar, Organized Labor, NLC, TUC, and other concerned Nigerians have said that they reject the plan by the federal government of Nigeria to borrow from the pension funds and from life insurance. The argument is that this will jeopardize the circumstances of pensioners. Now, there's the law, the enabling law, and the regulation, the Pension Act, that is, and then the regulation on how you can invest, pension funds. Does it allow the federal government to borrow? Because the law talks about investment, and it provides thresholds. Section 51, Section 52, Section 8.0 to 8.0 to 8.2 of the regulations. But now federal government says it wants to borrow for housing, for mortgage, and loans with a 25-year rate. Can the federal government borrow funds belonging to pensioners beyond investments?
Right. Thank you very much. Well, thank you very much. The conversation around the use of pension funds, which are long-term savings funds, has generated a lot of heated controversy, much of it needless, much of it uninformed. And it's important that we bring all the contributors back to facts. No one is discussing the facts of the matter. Everyone is, people largely, as I perceive it, are suspicious of the motives of the government. And the coordinating minister of the economy had made a statement to clarify, that they were consulting, with mobilizers of long-term funds with a view towards, working with them within existing regulation, not to modify the regulation. But the fact that I think that NLC and other stakeholders need to begin with is that, okay, the pension fund are usually not kept idle. These are lifetime savings of the contributors. So the custodians need investment instruments in which to keep them. And none is safer than government securities. And the fact, if you want to hear it, is that about 95% of members' contributions are already in government securities. The bulk of it in federal government securities. And they've been there maybe for 1 decade before the current administration came there, before the statement that was made on Monday was made. So the point is that the custodians have, in their best judgment, considered that it's safe and consistent with their regulation to keep as much as 95%, 85% of members' contributions in government securities. As of December last year, that was 12.2 trillion of the total members' contributions of 14 trillion and of the total assets of 18 trillion. Only about 300 billion of the 12.2 trillion were state government securities. The remaining 11.9 trillion were federal government securities. On top of that, you had about 1.5 trillion in money market instruments dominated by treasury bills, which are short-term instruments. So the money we are arguing about, we are suspecting that government wants to take, has already been invested by the custodians themselves in government instruments. Now, whether government use that to fund infrastructure or use it to fund real estate is a question that only government can answer. But the trend of pension fund portfolio in the country is that, private securities, takes about 2 trillion of the total assets. And this are ordinary shares, of private companies. And real estate, maybe about 0.5 trillion. So the lion's share, the contributions of the total assets are considered, are kept in government securities because they are risk-free. The federal government of Nigeria cannot default. The federal government of Nigeria will always pay.
Dr. Teriba.
The government is looking for money with which to fund infrastructure. I want to balance this point. The aspect of the financial system where there is huge opportunity but untapped by the government is in the equity market. Like, pension funds, pension custodians keep only 2 trillion in the equity market. But the equity market finances, multiples of that. So that's the window where if the government was looking to raise 100 trillion, we could. Right now, the total money we raise from the equity market, that is raised from the equity market by the government, is zero. We only do bonds. And we could do equity, and we should do equity.
Well, Dr. Teriba, Dr. Teriba, when you say that those who are opposing the federal government's plan are uninformed, will you say that former Vice President Atiku Abubakar, who was Vice President of Nigeria in 2004, when the contributory scheme was first introduced under the Pensions Act of 2004, is uninformed about something that was initiated by a government that is
I wasn't referring specifically. No, I wasn't referring specifically to His Excellency, the former Vice President. And I had listened, to commentaries, on the TV. You quoted only the NLC and
TUC,
the former Vice President.
Yeah.
You didn't quote, a series of comments. People who accuse the government outright, who announce suspicion. You can't take what's already in your kitty. So it's not right. It amounts to misinformation to be accusing the government of trying to take something that is already, anyway, in any case, invested, in their instrument. That's the point I made.
Okay, inflation.
I'm just saying, let's inform this conversation with facts.
Okay. Well, inflation, 33.6, 69%. Everything keeps rising in this country against the natural law of gravitation. Food inflation is over 40%. And yet we have had 2 meetings of the Monetary Policy Committee with Cardoso CBN tightening policies, approaching, the management of inflation and the foreign exchange regime by, tinkering with headline inflation, CRR, MPR, and all of that. And yet inflation keeps going up. What's wrong? What's the missing link? The MPC is going to meet again Monday, Tuesday. What should we expect? Further tightening?
Okay. In this regard, I would like us to be careful, and by, giving due recognition to the efforts that the Central Bank of Nigeria has, expended, the Central Bank of Nigeria and the Monetary Policy Committee, to arrest the crisis that they inherited. I would end up with the results, with the extent to which the targets that they were seeking to hit have been hit, or otherwise. But I do think that they deserve to be commended. They didn't create the crisis, and I would like to commend them for the following reasons. The first one is that they've managed to lead us out of a regime of opacity in foreign exchange management to a new regime of transparency. Everybody can see clearly what is happening. They've led us from a regime of exclusion to a new regime of inclusiveness. Everybody who has a role to play in that segment has been given a place on the table. And whatever else they have not achieved, they have achieved one important aspiration that we all yearn for. They've achieved harmonization of rates. For the first time in more than 5 years, rates have become convergent in the foreign exchange market again. BDC and the NAFEM rate, you don't know, well, one may be higher today, the other higher tomorrow. It's a big achievement. And I hope that they keep those milestones. Now, the key problem that we had, and they almost got there, in the wake of the tightening since February, is volatility. After the initial round of tightening, it had seemed that the rates, it wasn't as if for a month or so, the rates strengthened. But in the following month, 6 weeks, the rate has weakened again. And the key issue is, what should we be learning, from the development? You are not dealing with a single variable. You are dealing with exchange rate. You are dealing with inflation. And also, by all means, exchange rate is just a price. It is a price of something. And that something is foreign exchange. So that's another variable. So you are juggling multiple variables together. And the point is, you have to deal with, you have something of an hierarchy among these variables. You should not expect domestic stability in the absence of external stability. When you face both instability at the same time, you should, by all means, it's like, if you face external invasion and you also face pockets of domestic uprising, by all means, you have to give priority to the external invasion. And so the point is that unless you put the exchange rate volatility to bed, unless you stabilize the exchange rate volatility, do not expect any positive inflationary outcome or any positive deflationary outcome.
Okay.
Because unstable instability in exchange rate will keep being passed through into domestic prices.
Okay.
And the fact of the matter is that we speak a lot about exchange rate, we speak a lot about inflation, we don't speak enough about reserves. The only way to stabilize the exchange rate is to achieve foreign reserve adequacy. As long as the levels of our reserve holdings are inadequate, for so long you will have volatile exchange rate, regardless of what else you do. So you can't tighten your way out of a problem in the absence of foreign reserve adequacy. So what we needed to have done from before day one or from day one was to make sure that we did whatever we could, the same way Ukraine is running all over the world to make sure they have enough ammunition to confront this external aggression from Russia. Do whatever you can to make sure you have reserve adequacy. And then you can expect your exchange rate to be stable. And once your exchange rate is stable, you can expect, deflation.
Okay.
Yes, Dr. Abati.
A monetary policy trilemma, as this has been described. But in the face of all of this, two things.
Or the impossible trinity. Yeah.
Yeah, okay. Trilemma, impossible trinity. How do we achieve exchange rate, external reserves adequacy? And then I'm sure you are aware that the IMF and other foreign institutions have been praising the Tinubu administration for its policy reforms. They say it's working. But you say there are certain areas that will need to be addressed for us to move beyond administrative measures, regulatory measures, to have concrete outputs.
Okay, I'm glad that I also started by identifying the positive results that the Central Bank of Nigeria has achieved for the country. And if, the IMF and the World Bank are giving the country credit for that, the country deserves the credit. The president and his team, they deserve that credit. So I'm not denying that there are strong grounds in which you need to give credit. What I'm saying is that the lesson we learn from the tightening, if you have moved your monetary policy rate by 600 basis points and you have raised cash reserve requirement to 45%, those two measures are far-reaching. But they are going to meet on Tuesday. It's going to be 3 months after the first hike in MPR and after setting CRR at 45%. But the exchange rate at the close of business on Friday, so when they come on Monday morning, they are going to learn that the hike has been futile in having any impact on the exchange rate. They're going to resume on Monday to find that rate is exactly what it was before they hiked. And that inflation is worse than it was than before they hiked. So they hadn't met. The committee had not been constituted since July, of the previous year. They haven't met since July of this previous year. They only met in February. So when we didn't have a committee, when there was no rate hike, compared with when we now have a committee and there's a rate hike, there's no difference. We might as well still not have had a committee up till now. So it is futile to be moving monetary policy instruments in the face of foreign reserve volatility. You need to set your reserve house in order before you can expect that domestic monetary policy instruments will be effective. That is the point about the monetary policy trilemma. So if you do not set your reserve house in order, domestic instruments will not be effective. You are just wasting time. You are just imposing costs. You are just making life difficult for those who have to pay higher interest rates. You are just losing output for nothing. You are not going to gain any stability benefit from it. So let's all learn that lesson and have a strong consensus to support the government to do whatever we need to do to build reserves. And it's not far from the conversation that we started with, that if you want to build reserves, you have to switch from borrowing against income that everybody see that is not growing, towards raising equity against assets that we have but are idle. About when you go to the equity market, you are not borrowing money. You are selling ownership in assets, real estate assets that today are idle, but we probably have 10,000 parcels of real estate scattered all over the country, which people will be happy to part with good money to acquire, including, if you like, to acquire partial ownership stake in. I'm not saying sell anyone outright. The Federal Secretariat, National Stadium, the barracks, and the rest.
Dr. Teriba, I get your point.
You have our state-owned companies. You have our state-owned companies. None of them is listed in the stock exchange. List them. Partial, listing. You have infrastructure. Fund them with equity. Don't look for money to borrow to fund them.
Okay.
That's how you get equity. Teriba. And that equity, some will be domestic, some will be foreign. That's how you raise foreign reserve.
Dr. Teriba,
Yes,
I get your point about equity, not debt, and about an asset-centric strategy. So what will you say about the
not output-centric strategy?
Yes. What will you say about the $3.3 billion that we took from African Exim Bank and the additional 2 million, was it 2 million or 2 billion? $2 billion that we took from the World Bank? Was that a mistake? Is that what you are saying?
Well, in the best judgment of the government, they have taken those decisions. We're not going to, gain anything, by, labeling. These are alternatives. You can't label it a mistake. You can't say it's wrong. But the point is that what Nigeria requires right now is not $3 billion US dollars. It's $300 billion US dollars. And you are constrained by your growth outlook when you want to borrow. You shouldn't be trying to borrow because your growth prospects, expected income is the basis of debt. Everybody can see that you're already struggling, borrowing what you have already borrowed, servicing what you have already borrowed. So nobody is keen to lend you big money. But you are not constrained on the size of equity that you can issue. So the 3.3 billion is income securitization. You are securing your future income. Whereas what you should be securing is your asset. Because you are foregoing the income you need to service your debt tomorrow, for cash today, when you don't need to forego anything if what you are dealing with, idle asset, can fetch you 10 times that amount, can fetch you 100 times that amount. Why don't you go for that? When you got investment in LNG, you are not foregoing anything. When you got all those investments in GSM telephony, you are not foregoing anything. If anybody gives you equity on the Federal Secretariat today, you are not foregoing anything. It's giving you cash to come and bring something out of nothing. So I'm saying, look at our real estate, look at our SOE, state-owned enterprises, look at our infrastructure, and do massive, large-scale attraction of equity on the way, you know, Saudi is doing, the way India is doing. And you will get dollar liquidity without sacrificing any future income. That is the point.
Well, I hope Nigeria's economic managers are listening to you and that they will take a look at some of the things you have said. On that note, I would like to thank you very much, Dr. Ayo Teriba, for joining us on This Day Live, this Sunday Talk Show.
Thank you. Always.
Thank you very much.
Thank you.